G'day guys, Willard here from Kofkin Bond & Co for another market update for the month of August. With all this chilly winter weather we've been having and these periodic lockdowns, I think we can all agree we are looking forward to brighter times. Along with some good news with the gold model this time of year is the golden performance of our athletes in Tokyo. The economic fallout from on and off again lockdowns continued in July. The annual rate of inflation rose from 1.1 to 3.8 in the June quarter. This temporary blip was due to the higher prices in childcare, which was free in the last June quarter last year. Petrol and goods in short supply due to the supply chain and workplace disruptions. Even so, the Reserve Bank has said it won't consider lifting interest rates until inflation is sustainably within 2 to 3% target range. The Australian economy is expected to contract and unemployment to rise in the September quarter after the jobless rate fell from 5.1% to a 10-year low of 4.9 in June. Not surprisingly, consumer confidence as measured by the ANZ and Roy Morgan fell to an 8th month low to 100.7 points in July. Retail trade fell 1.8% in June but remained at 2.9 up on the year earlier. The US 10-year bond yield is still fading, which suggests that the market is still running on peak everything, in particular peak growth and peak inflation. US earnings seasons is nearly at a halfway mark, with almost 60% of the S&P companies have now reported. Beating rates remained elevated and blending earnings growth sits at 88%, up from 74% on last Friday. This is well and truly ahead of estimates growth of 52.1% in the current run rate. If it can be maintained, 85% would be the highest year-on-year earnings growth since the quarter 4 of 2009. Approximately 88% of companies have posted a positive EPS surprises, which marks the highest since the beginning of the tracking in 2008. NAB have announced a 3% on-market buyback to start next month. ANZ recently announced a 2% buyback, and CBA is expected to follow suit with a 3%. 3% of CBA is $5 billion. All this is positive signs towards Australian miners and profiters and dividends. Rio results included special dividends and kept resources sector rolling along. BHP results coming up and pressure on them to match. Crude oil and natural gas are up around 50% for the year, while iron ore prices are up 24% due to the gradual reopening of global economies and China's strong growth, up an annual rate of 7.9 in the June quarter. Record imports pushed Australia trade surplus to a record high of $13.3 billion in June. Australia's housing market is also increasing demand for materials, with housing construction hit a 2-year high in the March quarter. The Australian dollar fell to around 74 US cents in July. COVID news, vaccine tracker. There's been 4 billion doses done to date, and that equals to about 30 million a day. Australia's up to 162,000 doses on average, 5 months until Freedom Day. Indonesia's president won't resort to a full lockdown even as the country tops the world tally of daily deaths. Japan is seeking to extend the virus emergency in Tokyo until the end of August. As of Friday, we have a roadmap to end our snap lockdowns. The government has declared that with 70 to 80% fully vaccinated, we will be able to live in a coronavirus in the community. According to the Financial Times, 40% of Australians have now had at least one vaccination and only 18.2% are fully vaccinated. The UK is at 56% and the US 49% and Europe 47%. The UK is now a leading example with a successful herd immunity experiment, and now that we are following, we should be able 80% fully vaccinated by mid-March 2022 or January if the vaccine program ramps up. So now to some global headlines. Hong Kong has given shoppers a $600 voucher. Hong Kong's second quarter gross domestic products rose 7.8% from the year earlier, largely unchanged in the previous 3 months. Robinhood not looking so good on a lackluster debut. Scarlett Johansson is suing Disney. Aussie tech giant Atlassian surged 21%, lifting its market cap to around $81 US billion. Afterpay is set to be acquired by Square Inc. and in the deal it goes for one Afterpay share you'll get 0.375 Square shares, seeing a premium, and that's what saw the buy now pay later Pioneer rally around 20% yesterday. Humdrum week on the ASX 200, dropped 2 points in all, and the Kofkin bond modelled portfolio has seen a gain of 2.42%. Thanks for tuning in, and best wishes to all Australians that are still dealing with these lockdowns.